Welcome to Equity Mates. My name is Bryce and this is Alec, otherwise known as Ren, and we're looking forward to getting stuck in today.
Yeah, can't wait. Today's a big episode and we're talking about probably the hottest industry at the moment. No, not buy now, pay later, but electric vehicles. So much interest in these companies at the moment, and what we're going to be doing today is giving a brief overview on the industry, and then we've got two experts on, a bull and a bear, and we want to hear both of their opinions on Tesla.
Yes, Tesla has been absolutely flying over the last 12 months, so very much looking forward to that, Ren. But before we do, let's have a bit of a quick overview. Electric vehicles, there is no doubt that they are going to be the norm. If you look at what's happening around the world at the moment, countries are coming out saying that they're going to be having electric vehicles as a majority of cars on the road. What do you think?
Yeah, well, we've got some notes on some of the major jurisdictions around the world and their announcements. California, all passenger vehicles to be zero emissions by 2035. The UK will ban all petrol and diesel cars by 2035. The EU wants 30 million zero emissions cars on the road by 2030. And China is banning all new fossil fuel cars by 2035. So 2030s feels like a very big decade for electric vehicles.
Well, I mean, over the next sort of 10, 20 years, we're going to see a huge change if these numbers are anything to go by. But here in Australia, I guess they haven't really come out to say what our targets are, and I guess domestically tiny as well.
Yeah. So in 2019, electric vehicles were 0.6% of total new cars sold in Australia, which is below the developed world's average. The developed world, depending on the country, is between about 2.5 and 5% of all new cars sold are electric vehicles, which just shows, you know, the government's making these announcements for the 2030s, and you look at where most of the developed world is now, that's why there's so much hype around this industry, because that growth runway will be incredible. Here's a question for you. What do you think, what country do you think has the highest penetration of electric vehicles?
I'm going to have to go with a Scandinavian country, given how they are always ahead of the bell curve.
Yeah.
And I'm going to have to go, well, yeah, let's stick with Scandinavia.
You're in the right ballpark, yeah.
I'm going to go with Norway.
Oh, well, you've nailed it. It looks like you have been prepping for this episode. That's good. Norway, 56% of all new vehicles sold are electric.
Yeah,
Compare that to Australia at 0.6%. But, you know, if you look at these government announcements, the whole world will be hitting Norway and beyond in the next decade and a half. So really, that's the context. That's why electric vehicles are hot right now.
So there's no doubt that it's an awesome investing opportunity because of the growth and the runway that is going to be occurring over the next sort of 10 years or so, and beyond if it plays out. But what are some of the key investing areas that, if you want to get access to the market and it's not just about buying into Tesla, there are alternatives?
Yeah. Now, I think first of all, we should separate the whole conversation around autonomous vehicles out of this, because that's a whole separate conversation, and there's definitely an episode in that. But for electric vehicles specifically, there's probably three main categories of investment opportunity. The first one is in the supply chain, and you know, the lithium miners in Australia are, you know, very hot in Australia, and they've benefited a lot from this electric vehicle and battery trend. The second one are the legacy car makers. So I think almost every major legacy car manufacturer has either released an electric car or announced that they're producing one or more than one. So they're seeing the writing on the wall and they're transitioning. But really the third bucket, the bucket that gets the most attention, the bucket that is definitely the most interesting for most investors, is the pure play electric vehicle manufacturers.
Which has the likes of obviously Tesla, but now we're seeing an influx, you know, through SPACs or through direct listings. We've got NIO, we've got Workhorse, one of your favorites, Fixer? Fishka? Sounds like that game where you throw Finska.
Finska. No, Fishka has an interesting story. So they were an electric vehicle company around the same time Tesla was founded, like mid-2000s. They were a competitor. They folded, but now husband and wife duo back leading this company. They're releasing the Fisker Ocean, I think, in like a year or two's time. But they've seen what's happened to Elon Musk. They were there competing with him at the start. Now I think they want a piece of that action.
So I think for me, Ren, something interesting while we were doing the research for this episode has been in the supply chain piece. Have you heard of a company called Magna International?
Never.
Okay, so I hadn't heard of it either, but they are a Canadian manufacturer for automakers, and they are specializing in the technology component at the moment. And there's rumors that Apple are teaming up with them to create their own autonomous self-driving vehicle. And you can imagine the volume that's going to be coming through into Magna International. Its share price has absolutely skyrocketed, so keep an eye on it.
Okay. So, look, they're probably the three main areas. Obviously, not everything is booming. Nikola was a big story in 2020 as short sellers started pointing out some problems, including the fact that, this is my favorite part of the story, that they had a video of a truck driving on the road. Turns out they just rolled it down.
I don't even have anything.
So there are some electric vehicle companies and stocks that haven't done so well and have lost investors' money, but investors that invested in Tesla are very happy at the moment. You see on Twitter, some people have retired just based off holding Tesla for the last 10 years or so. So we have got two of Australia's investing experts, one a Tesla bull, one a Tesla bear, and we're going to have them both on the show at the same time, and we're going to hear both sides of the case for and against Tesla.
So we are joined by Anirba Mahanti from the Motley Fool for the bull case. Anirba, welcome to the show.
Thank you for having me.
And for the bear case, we want to welcome to the show Andrew Brown from East 72. Andrew, welcome.
Thanks, guys.
So Anirba, we'll start with you. The bull case for Tesla, it's absolutely been running over the last 24 months. What is the bull case for Tesla?
Okay, thanks for the question. And I'm going to start by disclosure saying that I personally own stock and I've owned it since 2013. So first of all, I'll say that it's very hard to make a bull case for a company that has a price to earnings ratio of 1600. That possibly makes it a little bit cheaper than maybe Afterpay, but that's where we are. So maybe I'm helping Andrew out here. But if you look at consensus estimates, then for earnings, and I think maybe they're a little bit low, the forward earnings, if you go to 2021, not 2020, then you're looking at probably a 200 PE, which is still pretty expensive. So again, I'm not helping my case here. But I guess the thing to realize, I think in my mind at least, is when the Q4 report comes out, I'm expecting the full year free cash flow to be around maybe 3 billion to 3.5 billion for the full year. And that's with 500,000 deliveries this year for Tesla cars or Tesla vehicles. Next year, my guess would be that they're going to be at 850, and probably the free cash flow is going to, at least to double probably at that point, or somewhere in the ballpark. So yeah, I think we have a business now which is going to see substantial free cash flow growth, given that Tesla spent all these years building scale, so scale in manufacturing, scale for batteries and so on, and they're going to be releasing new models. So we are at that point where I think Tesla could be potentially growing sales at say 30% for the next 10 years. And and as the world sort of moves away, as you guys were talking about, moves away from ICE vehicles, or I call them ICE age vehicles, to EVs, I think if Tesla could get 20% sort of market share, 15 to 20% market share, I think the current price sort of reflects that sort of reality, and which basically means that you're sort of looking at above average market returns, and that sort of reality is being reflected in the share price. So why do I still own shares, with that question, right? And the way I think about this is two things that I think the market tends to ignore, in my opinion. And one of them is the fact that we have a lot of other things that are going to happen. So not just profits, but free cash flows. But as Tesla invests on, say, new batteries, for example, they're talking about bringing the battery cost down to by 60% per kilowatt hour. That not only gives them an advantage in terms of vehicle sales, being able to price their vehicles, efficiently while making profits, but also in stationary storage, which is a huge, huge market opportunity. And then there's ancillary software sales that come with in the energy market. Then there's the autonomy component that you guys talked about. And the autonomy component, again, is interesting because I'm not even talking about robo-taxis or anything. I'm just talking about Tesla collecting data for all these miles that are being driven and just improving its software. And all really, in my expectation, is that if the, what they call full self-driving, as that just improves, the attach rate for that, which is the percentage of people that buy these things, goes up. So it was 15% a couple of years back. It's gone up to like 25%. But just imagine scale, right? As you're selling more vehicles, more people buy that. 30% of, say, a million is a lot. And then you have the ability to sort of with a flick of a button, sell this to all the existing fleet. That is 100% gross margin business there. And I think this is like the AWS sort of style component, which is like AWS but on speed, because you're getting this 100% gross margin opportunity. So I think those are sort of the angles that are important. And then I could talk about other things like how they're vertically integrated, they built their own chip. They have one of the best AI teams. So what we don't know is all the other things that they could be doing, right? So I think, again, as I said, it's hard to make the bull case, but I'm a holder. When I find the top dog and the top leader in an area, I sort of back that. I would not back the second guy. It's like backing Amazon, and I'm happy to hold through volatility, fully realizing, as I said, that the price is high, but I think the market that they are in is enormous, led by probably one of the best entrepreneurs of our time. So that's sort of the bull case. It sounds like a mild bull case, but it is the bull case. And it's my family's largest holding, so I'll just disclose that as well.
There you go. Well, Andrew Brown, I'm sure you have a lot to say to that. AWS on speed is the quote that I wrote down. So, Andrew Brown, give us the bear case.
There's two things really about Tesla. I mean, one is the business, and then the second is the valuation of the securities. The business itself, I don't disagree necessarily with some of the numbers that have been put forward. It's quite clear that next year they should sell somewhere in the order of 750 to 800,000 cars, and you've got two factories coming on late next year, which is Berlin and Austin, which will contribute potentially something, but the growth is from Fremont and Shanghai existing. That would give them, bear in mind the global car market shrank by 20 million cars last year from 91 to 71 million cars, and they've sold 500,000. I agree entirely that the electric vehicle segment is going to grow. I think what's not been accounted for there is the extent of competition. In Europe, Tesla are going backwards at a rate of knots, particularly in places like Norway, which is not a mature market, but is a really strong market because of the mandate to get rid of ICE cars there. And it's fairly clear that the Audis of the world are catching up very, very quickly. You're also seeing elsewhere basically joint ventures, and there's another one recently with GM and Microsoft to start and build things. And there's nothing like the valuations attached to these EV businesses within the car companies that are attached to Tesla. In terms of what Tesla are doing, it's quite clear that full self-driving Tesla is pretty much a scam. In April 19, Musk, and I'm sorry, I can't draw the same conclusion. He's one of the great entrepreneurs of our time. I think he's one of the great securities fraudsters of our time. Said that there'd be 1 million robo-taxis on the road by the end of 2020. Well, there are none. They're miles behind Google, who have Waymo taxis operating in parts of Phoenix and are extremely realistic about what full self-drive actually means in terms of safety. The company itself, they have now 160,000 vehicles on a recall, and they wouldn't operate properly with the National Transportation Safety Board in the US. The accounting in Tesla is highly questionable. I don't disagree. They'll create 2.5 to 3 billion of free cash flow. What wasn't mentioned is that 1.3 billion plus of that will come from selling green credits at 100% margin. You can't see a lot of those this year. Usually you can see at least 3/4 of them going to Fiat Chrysler, and you can't see those in Fiat Chrysler's accounts in 2020 to date. And Fiat Chrysler's demand for those in the future is much lower with the merger with Peugeot to create Stellantis. So that they're going to have to replace 1.3 billion or a substantial part of 1.3 billion of green credits over the next few years as the other cash flow builds in the company. So the stock price is assuming this company's miles and miles and miles into the future and is going to be just an absolute lay-down winner in a market which is getting more competitive and with some other big gorillas starting to take a real interest in it.
We might have to leave it there, Andrew, but very compelling bear case, as is the bull case from Anirbar. But thank you very much for joining us on the show. Left the viewers a lot to ponder, whether they're on the bull case side or the bear case. So again, thank you very much for both of your time.
No worries.
Well, that was great. I really enjoyed that conversation, that debate. Two very different perspectives on the same company. Bryce,
Yes.
I'm interested to hear your opinion. Which side of the debate do you fall?
Ren, I'm going to have to go with Aniba here. I'm a bit of an optimist, so I would love to see Tesla continue the way it has. Maybe that's not thinking with my head, but certainly my heart.
Yes.
Let's see what happens.
Nice. And if you want to share your thoughts on what side of the Tesla debate you're on, head over to the Equity Mates Facebook group. We've got a poll there and we'd love to hear your thoughts.
That brings us to the end of another episode of Equity Mates. Hopefully you got something out of that that will help your investing journey. And Ren, what can we expect next week?
Big week next week. Our first full week of the Equity Mates TV show on AusBiz. We're going to be speaking to more experts. We're going to be breaking down more industries and talking about some specific stocks. But really, every day we're just going to be covering something new in the world of investing that we're learning and that hopefully will help you on your investing journey as well.
Awesome. Can't wait.